time for Morning Movers. Diane King Hall sitting right next to me here live at the New York Stock Exchange, and we're looking at 3M opening at 3-year highs. Pretty good.
Yeah, it did. It's flagging a little bit right now, but it did pop out the gate off the back of its latest quarterly numbers. This is something that is the last quarterly reporting cycle would be you'd be hard pressed to hear a beat and raise quarter. So 3M beating expectations on the trailing quarter. For its second quarter, they reported EPS of $2.16 a share on an adjusted basis. They beat on the bottom line. They beat on the top line. Revenue coming in at $6.2 billion, operating margin 24.5%. That's above estimates as well. They're boosting their full year earnings forecast off the back of this. They're now projecting 2025 adjusted EPS to come in between $7.75 to $8. That's up from their prior guidance of less than $8. And that includes the impact of tariffs. You recall on their last earnings call, they talked about that. They worried about that headwind. So now, at first blush, this is certainly more bullish than they had been proceeding previously. You saw growth across a variety of sectors for 3M. Among their business segments, safety and industrial sales rose 2.6% to $2.86 billion. Transportation and electronic sales increased 1% to just under $2 billion, $1.94 billion to be precise. And you even saw consumer sales inch higher. Those rose 0.3% to just above $1.25 billion. So you saw strength across a variety of metrics. The CEO, William Brown, saying, quote, "With execution improving and solid results in the first half, we have confidence in our increased full year EPS guidance, which now embeds the expected impact of tariffs." So in other words, they are accounting for the impact of tariffs here. And not only are they accounting for it, they can see how they can adjust around it, Nicole. They talked about the consumer market is a little softer. As you notice, that's only edged a little bit higher compared to some of their other markets, but they have managed to navigate the headwinds and find some tailwinds as it comes to their results. Tariffs are a headwind, but they're adjusting for them through both supply chain shifts and pricing adjustments. The pricing adjustment stands out to me, Nicole, because we have started to hear about, some of these companies had been initially eating tariffs, but we soon see them being passed down to consumers. Nicole, I'm also kicking myself that I didn't bring a pack of Post-it notes down here for this.
Oh. Well, we all know what Post-it notes are, so yeah. You did your job, sort of giving us the full summation of what goes on with 3M. Obviously a huge company, and to have it at 3-year highs is really notable, because there were so many worries about the market overall, and when you have these big leaders. I mean, this is a leader. It was right, a Dow component. I don't know if it's still in the Dow, but it just shows when this kind of name hits a 3-year high. It's very telling. Look what happened with GE. No longer a Dow component, but another big player. Something other than AI, and that's my point.
Oh, great point. Yeah, that's a great point. And because we have been looking for that broadening out, and you see evidence of that even through 3M's performance. Again, they're popping back to the upside here, but they've outperformed the S&P 500 year to date. Year to date, the stock is up more than 20%. More than 20% year to date. Even better on a year-over-year basis. If you look at it on a year-over-year basis, that stock up more than 50%. So they have figured out how to adjust around these tariffs.
All right. Next up, we look at Chevron here. We talked about the Hess acquisition. That transaction has now closed, I believe. I don't know. You tell us some more details. It's up 1%.
Yeah. So there's a court ruling in this case that rules in favor of Chevron here. It's the International Chamber of Commerce. They have favored them in this. There's been a battle between Chevron and Exxon over a key area, a key dispute over rights in Guyana to some oil fields there. Chevron won this argument here, so that means they can close their acquisition of Hess here. It's one of the biggest energy deals within the past 10 years. It's been held up by this legal dispute between Chevron and Exxon over who has the rights to this property in Guyana. Chevron said it had the rights. Exxon claimed it had the rights over Hess's 30% stake there, right? No appeals are allowed in this arbitration process. So essentially this makes this a final and binding piece of this legal battle that's been at play here. It removes an overhang that had been hanging over Chevron. It had been facing some pressure because of just all the uncertainty around this. Again, this prize here is this Guyana piece of land, which is home to more than 11 billion barrels of oil. It's a significant oil stake that it gives it right now. And keep in mind, Guyana, one of the fastest growing oil producing regions in the world. So now Chevron has claim to this now, and so this gives it the move higher here. Exxon arguing about this a little bit, saying it, quote, respects the process. But don't exactly seem excited about this.
Look, I mean, the Permian Basin, I had some conversations about the low-hanging fruit in the Permian Basin has been taken. So more work it will be required going forward. It makes sense why they want to look to Guyana and other places as well to really diversify what they're doing. When I spoke to Stuart Glickman about energy too, about oil prices, and I said, what are we going to see first, like 70 or 60? And he said, well, 70, but I don't see 80 or 90 because the demand's not there. So while we may sort of tick higher with oil, he didn't see raging oil prices.
Oh, I think that's a great point there. Yeah, and look, I've heard from similar voices around price action in oil, and it's to your point, I mean, it's just above $68 a barrel. So yeah, so we could see 70 again, but you know, it's been in that range, hanging close to $65 a barrel. But again, Chevron really banking on this deal to increase Chevron's long-term production, overall financial performance as well. It strengthens it in terms of low-cost, high-growth upstream asset here. So it's key essentially to this company's turnaround. The shares are not as high as they were in the pre-market, so a little bit higher. Exxon Mobil being dinged off the back of this. Exxon Mobil down 1.5%, Nicole.
Okay, next up we have Oracle, all-time highs for most of last month. And today we did have a price target raise.
Yes, that's right. This is JMP Securities. They're raising their price target, or Citizens JMP rather, raising their price target on Oracle to 315 from 240. So they see even more upside from here. They are maintaining an outperform rating here. They're citing some private checks that they see for indicating improvements from Q1 to Q2. Their highlights is that Oracle has found its niche in this AI world that relates to its confidence in its role within AI and cloud services. We continue to hear about Oracle within that conversation about AI. The stock is a little bit higher right now, but it's been a significant outperformer compared to the S&P 500 year to date, up nearly 50% year to date on a year-over-year basis. Once again, similar to what we talked about with 3M, outperformer as well, but even greater outperformer, up around 80% on a year-over-year basis. You can double check that to just confirm that. But in terms of other notable analyst activity that we've seen recently, you see a lot of constructive views around bullish sentiment around Oracle. UBS had boosted its price target. They've got a $280 price target. They've got a buy rating. That had helped push Oracle to a previous 52-week high. Piper Sandler has a $270 price target on Oracle, and they are overweight as well, which essentially, as you know, is the equivalent of a buy rating. One more to note here, Jefferies has a $270 price target. That was up from their $220 recently, and they once again see that cloud contracts, transformative cloud contracts being a key driver for Oracle in the road ahead, Nicole.
So the cloud services opportunities are really good. That looks good. Demand for AI is growing. We're seeing a lot of price targets that are higher than where we are now. And this $700 billion market cap is a financial milestone as it's approaching it here. So big news. I got to double check even the market cap at this point. But certainly a real winner. We're near or around there, but it's monumental.
It's right. It's like a stone's throw away from that. Throw a stone and it's going to hit that $700 billion market cap. So yeah, it just continues to climb. You know, even when you look at a 5-year chart, even better. It's like a steady mountain climb for Oracle. If you kind of go back to the earlier days of COVID, that stock is up more than 300% over the past 5 years, 350%.
As we're talking, it's just crossed the 700 million market cap. Really incredible news there. So Oracle, 3M, Chevron, a little Exxon, a little of everything. Diane King Hall, great to see you. Thank you so much.